Amy, how are you this morning?
Good to see you.
Good to see you too. Okay, so this is going to be an interesting one. I have three panels I'm doing. We talked to Jeff Solomon yesterday, who was former CEO of Cowen, which was a challenger bank acquired by TD. I have Brett Tejpal later today, who's co-CEO of institutional Coinbase, and I have you, who's running digital asset strategy at Morgan Stanley, which is, to me, a huge deal that Morgan Stanley has appointed somebody as digital assets. But why don't we just start a little bit? Just tell everyone about Morgan Stanley, because I think a lot of people in the DeFi space think every single big bank is the same. What's Morgan Stanley's expertise? What do you do? And why don't we just start there?
Sure. And I think that's a great point to start because I think when you look at the GSIBs, a lot of folks want to compare what Morgan Stanley does, what JP Morgan, what Goldman, what Citi do. And many of our business constructs are quite different. We have a considerable investment banking business, investment management business, and the largest wealth management business in the US. And with that, that's really where we need to align our digital asset interests. We don't have retail banking. We don't have to manage corresponding banking business like some of our peers do. So I think that gives you just a good construct of where our alignment and our strategy is really going to fit when we look at the digital asset space.
Great. And you sort of just, sort of yada, yada, yada through it, but you have $8 trillion of assets under management.
That's right.
Through wealth management, which means you're managing actively, for the most part, $8 trillion of other people's assets. Is that right?
The next largest platform is 30% smaller than we are.
Yeah. So this is a big deal. If there's somebody who can help orange pill the world, it would be Morgan Stanley.
That would probably be accurate.
And that's now your job.
And I think the one thing also to highlight there, we do have our E-Trade business. I'm always surprised sometimes when I run into folks that don't know that we own E-Trade and that they're now part of the Morgan Stanley brand. But I think we have an entire spectrum of wealth management, from basically self-directed to your mainstream wealth management, to your high net worth and family office business. So we really have the whole spectrum covered within that wealth management space.
Yeah. So great. So there's also, Morgan Stanley probably has the longest term history as a banker of then MicroStrategy. For everyone's perspective, when we were just a software company, which we still are, in addition to our Bitcoin, Morgan Stanley was our lead technology banker. We used to, ironically enough, buy back stock with our excess cash. Morgan Stanley led that. When we transitioned to our Bitcoin strategy and we did our first Dutch tender auction, Morgan Stanley led that. And most recently, the largest IPO at that time last year was Stretch. Morgan Stanley led that. And what was unique about that, one, it was a very unique instrument, a perpetual preferred with a floating dividend. And two, it was the first time it was distributed to Morgan Stanley's wealth, which was 8 trillion of AUM had access to Stretch. Tell me about how that decision came to be, because I know it wasn't an easy one.
Yeah, well, I think one of the things that we've lived through over the last number of years, and this isn't going to surprise anyone in this room, is a very different landscape in terms of the regulatory environment. So as you could imagine, one of the largest banks in the world, we had a fair bit of pressure on us around really navigating that regulatory environment. So there was a limitation in terms of what we could do, and I think there was a risk management component to that that continued to open up last year, right? So 2025 was an incredible year for us in the organization, where many of us that have been working on these digital asset initiatives across the organization felt a lot more flexibility to take the next step and push things through a little bit farther than they were before. And I think that's really, it was perfect timing, even with that Stretch offering. I think the other thing too that's really interesting about that product is just what it offers. I mean, I'll tell a little bit, you're the expert at it, so I can just put my highlights in there. But most of what we've seen come to the market is just passive exposure where you have to eat all of the volatility that comes along with that. And this is the first time you started to see products roll out there where you were quite thoughtful in doing this and offering the stability, the yield. I mean, yield is a huge topic beyond just the digital asset space, but just in the wealth space overall, and the tax efficiency. I mean, those are just key words, and you're able to put that uh, all in a package with the underlying being that Bitcoin asset, which many people feel very strongly about. And it's a very interesting product to talk to clients about.
So give folks a little bit more perspective. We'll talk about Stretch a little bit more. Uh, a preferred, a hybrid, if you will, has primarily been issued by banks, including Morgan Stanley and other banks. And you've seen charts where the liquidity on a preferred typically trades about $1 million a day, a public preferred. Give people maybe the history of how do preferreds work before Stretch came along, and what do you think the future is going to look like?
Ooh, I am not the expert at that. That's going to be my team, and I'm not going to go into detail on that.
Okay.
I'll leave that to the bankers to go into. The one thing that I would just highlight there, though, is I think there's a major lift on the education of how these work. I think you guys have put a lot of time into doing that, but I think there's still a lot more work to be done just in terms of uh, really having clients understand. And I guess the other thing is, how much do they really focus on that? Or do they really just focus on some of those high level points that I brought up before around the stability and the yields, the income component that they have on that?
So your advice is forget about the fact it's a preferred and just talk about the yield, the tax deferral, the income component, how it's stable, how it's over collateralized.
You know, I think that's from the experience. They have so many products put in front of them every single day. You really have to make it quite simple to understand. And I think that's one thing that you've done specifically with the Stretch product beyond some of the other products that you've put out there.
Okay, great. Well, we've worked with pretty much all of the banks, and can attest that Morgan Stanley is one of the more digitally forward
Mhm.
ones. Tell me how that came to be, and what is your role? What are you doing?
So we've been working the digital asset space for a long time. We may have not had a head of digital strategy or a digital asset team, but this goes back years ago. We were focused on blockchain technology, DLT, when everyone was really focused more on the private blockchain initiatives in the mid-teens prior to COVID. And and you saw this continued adoption. It's really almost at the same time you started. I remember sitting in COVID on your first institution, Bitcoin for institutions, when you rolled that out during COVID. I think it was all just remote at that point. And really it was at that moment that you just saw this continued discussion and exploration of institutions around spot crypto. We are rolling out on the E-Trade platform, Spot Crypto. We've been public about that. We're looking at wallet technology for entire wealth management space. We filed for a couple of crypto ETPs, so we will be offering those to clients in the coming months. And across our entire sales and trading business, anywhere where there's an opportunity to assess a connectivity point to the digital asset space, we're exploring. If that's tokenization of equities, uh, tokenization of structured notes, some sort of opportunities within our fixed income, our FX business. There really is every area that that need to explore to see if it's a crypto opportunity. So looking at things like Bitcoin, Ethereum, Solana, and otherwise, or looking at just using that technology for some of the opportunities that you've seen as folks have talked more about tokenization and stablecoins this year.
And so what's your role? Like, do you have a number? They're like, Amy, you're going to run digital strategy at Morgan Stanley. You need to grow X percentage of, you need to convince $8 trillion worth of people to put 50% of that into Bitcoin. Is that seems like a reasonable
Oh,
objective?
yeah, there we go. That's a good KPI to give my boss. Uh, I think really what we need to do, and we've seen this over, we've learned over the years because we've quietly been living through a number of these cycles, is as these things have popped up around the business, we've really had to stay more coordinated with building out the infrastructure to support this. Uh, this is not the same infrastructure that we're running today in terms of our legacy trading, spot crypto, the custody that goes along with it, the data that goes along with it, the consolidation, making sure you're getting the liquidity across all the exchanges. These are all infrastructure elements that we need to build out internally to be able to offer that institutional support for the business, regardless of which direction this goes. So I'm trying to do this at the firm level and make sure we're coordinated across every division. Because as you can imagine, it's very easy within an organization as large as ours to have 52 meetings with the same vendor. And many of us all have friends. Some of us in this room work at fintechs. You don't have that much space to deal with our organization with that sort of fragmentation. So we're really trying to get this more coordinated. The second piece of this is the client side. So we have, I mean, it's really part of our entire ethos at the firm is really the client-led initiatives. And when we get into something, it really is many times driven by the client demand. And there is significant questions that we're getting from clients. If that's allocations, we've put out a fair bit of research from some of my colleagues that are here on the allocation within the wealth management space. How much should you allocate to Bitcoin or the cryptocurrency space? But also, as we see some of these other topics, how is tokenization going to disrupt my business? What do I have to think about with the introduction of stablecoins? Do I have to be ready for this? Are there businesses that are at risk that I haven't thought about yet? So there's a significant amount of incoming, and we're also trying to coordinate that.
That's great. Um, so let's talk about some of the products that are coming up from Morgan Stanley. You'd mentioned you're going to allow folks on the E-Trade platform to buy and sell crypto, spot
Mhm.
crypto, which is great. And I think you're doing that through a partnership. And then I think later on, at some point in time in the next year, you're actually going to build out a native custody and
That's
exchange
right.
solution, which I'm pretty excited about. You'll potentially be the first major bank to offer that. Why is that piece important? And what are you thinking about? Like, how does that strategically fit in?
Yeah, I think it's a natural, we really need to build this out internally. We can't just primarily rent the technology to do this. People expect Morgan Stanley, they trust our brand to be no fail. And when you sit in that position, you have a significant responsibility to your clients to make sure that you're delivering that in any level of technology. So I think that's one of the things that we want to do. It's a totally different environment to know that you are custodying your assets. You have legal custody with Morgan Stanley, and Morgan Stanley is overseeing those assets for you. Uh, there's always those that are going to want to self-custody. That's a natural part of this space, especially in the Bitcoin space. I think for some of you in the room that may not know my background, prior to being in the digital asset strategy space, I ran our emerging market investing business for the last 13 years, and I've been at the firm for 26. So my entire background in emerging markets, as you can imagine, the adoption of Bitcoin and cryptocurrency. I mean, I think we lead 17 of the top 20 markets of adoption around the world. This has been a very, very long journey for me, being on the ground with many of these companies and investors and users of cryptocurrencies early on. So, one of the things that we really want to do is just make sure as this continues to mainstream and institutionalize that we're being able to provide those services to clients.
Well, that's pretty exciting. So you're going to offer the ability to custody and buy and sell crypto, and Bitcoin specifically, and probably some other coins. Do you think you'll offer yield and lending services
Of
against that
course.
Bitcoin?
Absolutely, that's part of the discussion and the exploration. It's a natural part of the roadmap to continue to explore. I think we're in very early journey on that, just in terms of the number of products that are out in the market. I think we've seen even this year, little bit surprised at how much momentum there is around DeFi lending. That's definitely a topic that we've seen pop up again and again. We see headlines around that in this year, but a little bit of a different product than what you have with Stretch.
Yeah. And so awesome. So crypto, custody, exchange, yield, lending, which by the way, I think is going to be world changing
Hmm.
when you do that. Do you so $8 trillion in assets on platform. I assume part of this is a commercial decision because people have crypto assets off platform.
Yes.
Do you have a sense of how much that might be? Uh,
It it's a it's a considerable number
Yeah, so it's a lot.
of current clients.
Right, and so you would then get that onto your
So
platform
you can
too,
do so you can either bring that in through at one point you'll be able to bring it in through spot deposits, but there's another way that the regulators have created for us just in the last few months where you're now able to in kind Bitcoin into ETPs.
Yep.
So as you've seen, we filed the first week of January for an ETP for Bitcoin, Ethereum, and Solana. And the intention would be that you can also in kind into any of those ETPs. The other thing is once those assets are on the wealth management platform, you're able to provide the client many other services around that exposure that they have on the platform. I mean, that's pretty incredible. That unfortunately is something that the crypto space has not done well offering their clients additional services around just the trading aspects of the business.
Yeah, I think the opportunity here for you is significant. So I do some of my wealth management through Morgan Stanley, and you guys have done a great job. And I have my Bitcoin off platform,
Yep.
and my wealth manager is always asking me, "How much Bitcoin do you have?" And I'm like, "I don't know that I want to tell you." And,
No, probably not.
and so then but then I say, "Can I get a loan against my Bitcoin?" It becomes a very flum a clumsy conversation that when you bring it all on, it's just simple loans, etc.
Well, you'll be our first call.
I would love to be your first customer. So, sorry. So let's talk about tokenization,
Okay.
right? And what you're thinking about doing there in that space.
So I think that's a unique aspect. I mean, even as you highlighted the build out of wallet technology, being able to hold crypto within the wealth management platform, there's a broader extension of this as we're really starting to see very active work around tokenization of every asset, if that's equities, different fixed income products, or even privates. So there is that component of it where you may have a wallet in the future that we're able to help democratize the access to privates, really strip down some of the administrative burden in that. And I think that's really where we're spending our time. I think we don't want to tokenize for the sake of tokenizing assets. It needs to really have that like value add for the client. So are we stripping out the admin? Are we making it easier to use as collateral? Are we able to move it faster? We've seen a lot of headlines now around 24/7 trading. Those are all things that we have to support, and that's a pretty heavy duty tech lift, risk lift, operational lift. And I think the one thing that maybe I would just highlight a little bit, which is a pretty distinct when it comes to thinking about our business. Historically, in the financial services firms, we've always thought about front office and back office. You know, are you front office person? Are you back office person? And they usually don't mix too much. I mean, even when I grew up in school, you either went into finance or you went into tech, and they were like this far apart. There was very little crossover. The thing that we're seeing right now, both with the digital assets trend and also the AI trend, is that these are side by side. And even as we're designing products, we really can't just do that client facing or the product level design without having all the back end understanding and considerations right up front. So I think it's changing the entire way we think about even constructs of our businesses. And that's actually one of the reasons too to have this central team so we can make sure everyone's in that discussion from day one when we're looking at product design.
Right. What about stable coins? Will Morgan Stanley be a player there?
If digital money happens in whatever format that is, we'll be there. We don't have a choice.
Right.
If that's stable coins, if that's digital deposits, if that's tokenized money market funds, we have filed for tokenized money market funds. We have one product that's already live in the market. And maybe this just continues. Sometimes I forget how many different activities we have going on out there. But this just highlights my point that I was making earlier of going through the entire business, looking at every single business line and understanding where that opportunity is to consider the future of digital assets.
Right. So this is Bitcoin for corporations. We talked a lot about the wealth management part of Morgan Stanley because that's what you're very well known for. You also do a lot of work with corporations, especially through your investment bank. We work with you. Um, and we started with this idea in 2020 with Bitcoin for corporations, that Bitcoin is what corporations should put on their balance sheet. And we've evolved to this idea that, there should be Bitcoin treasury companies, but for I'll call it more traditional company, something like Stretch would work on a
Mhm.
balance sheet. What are your thoughts around, if you're a corporate CFO, corporate treasurer, you saw a couple of announcements yesterday. What are your thoughts around the role of treasuries, the role of corporations,
Yeah.
and should they be yield seeking in addition to capital preservation? And could Stretch be an interesting instrument for that?
So one interesting point in terms of my focus last year when I came to this event in Orlando, and the team knows this well, the one reason that I wanted to come is just to sit in the sessions around adding Bitcoin to balance sheets for corporations. It's where you started when I sat on so many of the early initiatives that you had trying to educate the institutions. Uh, but I think one thing that happened last year, which was interesting, where we sat in these sessions and we're really trying to understand the construct of how much Bitcoin do you put on the balance sheet? How do you consider it? How do you manage it long term for a leadership team? The DATs came in, and then it just became all about the DATs in 25. So I'm still very interested at looking at this opportunity where you see some of these announcements where they still have that core business, but they're looking at continuing to just put a percentage. They're not taking the whole company and focusing on just just Bitcoin or some other cryptocurrency, but really being thoughtful about what that means for their balance sheet. I'm an independent director on a fintech company in the Middle East. And I was telling Phong this just before we walked on stage, just about 2 weeks ago, our board approved putting Bitcoin and a couple other cryptocurrencies for on the balance sheet of the fintech. And it's something that we had worked on for quite a long time, and I would like to continue to see um, corporations just be educated and understand what that opportunity is for them going forward. And Stretch is an interesting product, right? Because that's the one thing that we have always struggled with is some of the volatility, especially for potentially smaller fintech that may not want to take on so much risk, even larger organizations where that product offers different volatility dynamics and income dynamics there.
Well, great. Um, the Morgan Stanley, I think Denny Galindo, sort of led, research that said that for the right types of customers, they should consider having 2 to 4%
Mm-hmm.
of their balance sheet in Bitcoin.
Mm-hmm.
Tell me about where that came from, and is it the right number? How should people think about that?
You know what pains me the most about that number? Do you know what
It's
the
too low.
do you, do you know what the
That's what pains me.
I mean, I've spent 26 of my years in the emerging market space, and I think the allocation to emerging markets is like 2 to 4%. So I'm in competition with Bitcoin now, in terms of allocation, and some of it is crossover there. Uh, Look, I think that the clients are looking for some sort of starting point. And I think that's a safe starting point depending on your risk, uh, your risk level to really step into some. I mean, again, maybe it's the reason why it's the same or very similar to emerging markets. They have some similar risk dynamics. It's not for everyone. Not everyone will have the exposure in their portfolio, but for those that are interested and want to take a position, that 2 to 4% is a good starting point. Some of us that are more committed to the space probably have more exposure than that.
Some of
Just
us.
guessing.
Yeah. Well, look, where you've come in the last year, supporting some of our products like Stretch through wealth management, where I think you're going to come in 2026, allowing people on E-Trade to buy spot Bitcoin,
Hmm.
creating a custody and exchange platform, offering yield and lending. Those are huge things. You're going to move into tokenization, into stablecoins. That's all fantastic. That's just year one of your job. What happens next year? Where do you see this all going?
Uh, the one thing that I actually see is the products are still pretty basic. I mean, we're still at such an early, and I made this point earlier, passive single uh, asset ETFs or ETPs that are in the market. We need, for some of us that have had exposure for years, like where's the active management where I can put my cryptocurrency in an account and have an advisor on my cryptocurrency exposure? It can be considered in that, or that someone's actively managing that for me. That really doesn't exist in too many areas now. Separately managed accounts. I mean, I'm just talking my own personal exploration of going through this space. There's still so many more advanced products that we should see out there. There's still very few actively managed funds that are looking at the cryptocurrency space, and you could kind of go on from there. So I think we're still in very early adoption of this, and there's much more sophisticated products the same way we have in every other asset class today.
Well, look, we're very proud and excited to be partners with Morgan Stanley, and the evolution I've seen in the bank over the last 10 years has been fantastic, and we'll continue the journey together. So thank you, Amy.
Thank you. Appreciate it.